Thank you everyone for being here today. The paper I wrote was co-authored with Brikisha Sams. She's an analyst at ITEP where I work. In case you're not familiar with us, we're a tax policy shop, an independent nonprofit group working on federal, state, and local level tax policy issues. So, of course, the backdrop against which we wrote this paper is one of intense racial inequality, and it's not a mystery where this inequality came from. We know it was created and solidified through centuries of discrimination and exclusion, and it's reached a scale, frankly, where it's not going to be resolved naturally on its own. This is going to require concerted effort in the policy space and elsewhere. And I think we have a moral imperative to be talking about policy solutions to make progress on this. So I used these data from the Center for Retirement Research at Boston College to help contextualize the paper because it really speaks to two big tax issues. There's a lot of relevant tax issues here. But the first I want to talk about is, of course, the payroll tax for Social Security. That's arguably the most important single tax policy affecting families' retirement security and especially racial gaps. We know that Social Security income is the most important source of income for most older people. And if you express it as an implicit form of wealth, it's about 53% of wealth for a median quintile, middle quintile household nearing retirement age for white families. It's about 81% for Hispanic families and 86% for black families. So you can see this is tremendously consequential to understanding racial retirement gaps. When we look at retirement wealth outside of Social Security, on the other hand, the darker shaded bars here, this is a form of wealth that's very unequally distributed right now. White families, by this measure, have about 5 times as much as Hispanic families and 7 times as much as black families. And so looking at the tax preferences, the tax subsidies, tax breaks, whatever you want to call them, on the books that favor that form of wealth, they've recently become taken together as a group, thinking of pensions, IRAs, the Savers Credit. That suite of tax preferences recently became the largest single category of tax breaks in the entire federal code. We're talking about well over $300 billion a year in federal tax breaks, tens of billions more in state and local breaks as well, either from conforming to these federal provisions or from states going in and enacting additional tax preferences on top of it. So obviously, we're talking about a staggering amount of money here, and it's important that we ask, what do we have to show for it in the racial equity sphere? And for understanding this question, this is, I think, a useful starting point. This is data from the Tax Policy Center, looking at the distribution of retirement savings tax subsidies by income level. And what they found is that families in that 90th to 95th percentile, so we're talking here about folks earning about $280,000 to $400,000 per year, that is the peak of this distribution where tax savings relative to income are the largest. Now, if we were to show this graph just in average size of tax cut, of course, the largest tax cuts would be going to folks at the very tip top, but this is expressed as a share of income. And I think if you're thinking about racial equity, in my opinion, this should be setting off pretty loud alarm bells in your head right now. Now, if you just go back to middle school and remember when we learned the transitive property, we know that upper income families disproportionately benefit from retirement savings tax subsidies. White families are more likely to be upper income, and therefore there's strong reason to think that white families are disproportionately benefiting from retirement savings subsidies. And that line of reasoning, it's very incomplete. There's a lot of context that I'm going to get to in just a second, but I think it's an okay starting point for beginning to wrap our heads around this question in the absence of perfect information here. So what we did was, as a basic exercise, start with what we know about who's benefiting from retirement breaks by income, look at where folks fall in the income distribution by race. So if income is a good predictor of retirement savings benefits, what would that mean for the racial distribution? We found that Black, Hispanic, and Indigenous families together make up almost a third of the population, about 31% of tax units. And they only receive, though, in this math, 19% of retirement savings subsidies. And like I said, there are good reasons to think that number is high. So a few reasons I think it's high. The first is that there's controversy over how we measure the distribution of retirement savings tax breaks by income level in the first place because of the timing considerations. So in this math, I picked one of the more muted distributional results from the Tax Policy Center. If I had picked one of their other measures, we would see an even more extreme gap here. Another issue is that we know that retirement wealth by race is very unequally distributed, even if you control for income and even if you control for age of the householder. And Dorothy Brown's work was referenced yesterday. I think it's incredibly helpful in understanding this issue. And a lot of it comes down to the differences in how black families and white families, for example, have to deal with financial demands because of the vast differences in retirement wealth broadly in those two communities. So for example, we know that black families are much more likely to be spending money supporting extended family members, for example, because of much lower wealth in those communities overall. That means when there's an immediate pressing need in the family, retirement savings is sensibly often pushed to the back burner. We also know that people of color are much less likely to receive inheritances, and when they do, they're smaller, and because of that, there's less other forms of wealth to draw on for making a down payment on a home, for example. So it's another case where you can see retirement savings having to get pushed to the back burner to meet more immediate short-term needs. So I think I wanted to be sure to mention a really amazing Department of Treasury report that came out in January. Some of you may have been familiar with it. This was, it's useful here for beginning to get, it did not evaluate retirement savings preferences specifically, but it evaluated 8 different tax expenditures, tax breaks by race. And I think some of the estimates we found in that report can help bookend an estimate of where retirement tax savings fall from a racial perspective. So what they did, I want to mention that this is the first government study to ever go through the detailed tax data. And they were looking at people's names, their geographic location, their income, their marital status, all these different variables to make an accurate prediction of the race of who filed that tax return. It's really a remarkable piece of work. And the two preferences I think are most interesting here are when they evaluated the exclusion for employer-provided health care. If we tinker with their numbers a little bit to make it apples to apples with this table here, what their analysis suggests is maybe about 17% of that benefit is making its way to black and Hispanic families. And when they evaluated capital gains preferential rates in taxable accounts, they found that only about 6% of that was making its way to black and Hispanic families, an incredibly low percentage. I think it's very likely that retirement savings policy is falling somewhere between those two levels. So we calculated 19% here. I would guess it's, if we think the Treasury study is accurate, it's more likely to be in the low teens, I would say. So the bulk of these dollars are clearly not making their way to historically marginalized communities right now. Very briefly, I want to emphasize, again, this is not just a federal issue. Almost every state has private pension tax exemptions of its own that I should say almost every state conforms to the federal government pension tax breaks, and then most add additional ones on top of that. We have 27 states today offering some kind of pension tax break on top of the federal subsidies, and that's compared to 11 states back in the 1970s. So this is an expanding issue at the state level. So one thing we do in the paper is offer a few guiding principles for helping think about what a more equitable tax approach might be in the retirement sphere. And the first thing we highlight is just that credits are almost always more equitable than deductions. Of course, the difference here, exemptions, deductions, exclusions, these come off of your taxable income. So a wealthy family, for example, for saving $1 might save 37 cents in taxes, whereas a middle-income family might save 12 cents, and a poor family would typically save nothing from an exemption, which is why we've seen recent efforts around the saver's credit. A second point here is that if we're going to run very, very large retirement tax policy through the tax code, we need to make sure we have guardrails in place to keep it focused on some core objective, and that core objective should be promoting retirement security among people who don't already have adequate wealth for their retirement. And we've seen plenty of cases where things have gone off the rails here, to be frank with you. I mean, there's been reporting recently on Peter Thiel's $5 billion Roth IRA. He's not alone. I mean, there clearly comes a point, we've had, this is the reason behind some of the presidential proposals from President Obama and President Biden to deal with very, very large taxable tax preferenced retirement accounts to get them more back to this core purpose. I think that has racial equity implications. Thank you. And the third thing is a much broader point, and this is something I say, I talk on a very broad range of tax issues, and one thing I find myself saying again and again and again is, it's not always, not every problem demands another tax break. We've seen a lot of this. The tax committees are incredibly powerful for a reason because they legislate on every issue imaginable. There's this large amount of momentum to keep running policy through the tax code. And I think here you're running up against some pretty clear barriers in really trying to move the needle on racial equity with tax cuts. I think, from my earlier slides, it's clear that Social Security has really been doing the heavy lifting in terms of narrowing racial retirement gaps. And I think it's likely to continue doing the heavy lifting. So if you come to me as a tax person and say, what should we do first? The first thing out of my mouth is going to be, well, let's do whatever we need to through the tax code to keep Social Security solvent. And if you're coming to me saying, well, we want to narrow these gaps, we're not happy with the retirement wealth gaps today, then, in fact, we should be talking about potentially expanding the program, not just, keeping it afloat at current levels. So that's where my mind goes there. Yeah, I think I've hit on the main points I want to. I have a couple extra slides here, but thank you. I hope that was